And considering the market opportunity in this segment, we estimate the B2B opportunity at $29 trillion.
Softbank, SoFi's top institutional holder, sold about 49.9 million shares total this August. This caused SoFi's stock price to freefall. So why did this happen? Recently, Softbank just reported about a $23.4 billion loss from falling valuations and foreign currency losses in its portfolio fund. Selling some of its holdings made a lot more sense after this, and SoFi stock was also up due to reporting its record-breaking Q2 results. Softbank selling SoFi, in our opinion, has a lot more to do with Softbank's current position than it does with SoFi itself. Kinda like a it's not you, it's me situation, especially considering SoFi's recent performance.
What happened? Something must have happened.
It's not you, it's me.
So what does this have to do with you as an investor, and should you still buy SoFi? In this video, we'll give you 3 key reasons in our opinion why SoFi is a strong buy, some details about recent sell-off, and why we still have faith in SoFi long term. Fun fact, in terms of our portfolio, SoFi is about 85 to 90% of our entire stock portfolio, and we definitely don't recommend doing this at all. We just do this because maybe we're a little bit crazy. And on that note, we are not financial advisors, and this is not financial advice, so always do your own due diligence. We know it's been a tough year since SoFi went public. Even so, SoFi is an undervalued gem that's affected by the market's ultimate enemy, and that's none other than volatility, baby. And if you want to know why, here's some 3 key reasons that we think SoFi is a strong buy for people with a long-term time horizon. Number 1, SoFi just keeps providing more value to its members and in turn increasing the lifetime value of its customers. There's a quote that describes this cost-effective tactic, and it goes a little something like this: don't find customers for your products, find products for your customers. Aside from having a unique approach to expanding the target market, sources tell us that doing this strategy and with lower costs comes more profit and ultimately shareholder value. Speaking of which, SoFi just launched 2 new ETFs, SoFi Web3 and SoFi Smart Energy under SoFi Invest this August. And this is what Commander Noto had to say about these new SoFi products. We know many of our members look at Web3 and clean energy as important parts of the future, and we are thrilled to be providing low-cost investment vehicles designed to meet those interests. But it's not just that. SoFi is also increasing its APY, aka annual percentage yield, to 2%. According to Bankrate.com, here are some of the best high-yield savings accounts in August so far.
That's the best you can do!
Number 2, SoFi is constantly producing record-breaking results. We're sure you already know by now that the main constants in life are death, taxes, and SoFi consistently breaking record. In its whole history as a publicly traded company, which started around Q2 of last year, SoFi's growth in increased revenues and even its members remain constant. If you look at SoFi's history of adjusted net revenue and EBITDA, SoFi achieved an approximately 313% increase in adjusted net revenue since Q1 2020 and a 131% improvement in its adjusted EBITDA in the same period. On top of that, before any short seller tells you SoFi is not worth it, we'd like to tell you that SoFi even improved 42% year over year on their net loss. Number 3, SoFi's tech legacy. We always say in this channel that we believe SoFi long term, and 2 of the biggest reasons is its tech legs. The dynamic duo Galileo and Technisys, which produce strong revenue and each have a ton of potential. In the latest Q2 earnings, Captain Noto said that these 2 businesses would aim to achieve faster innovation at lower costs and more returns from diversified revenue streams. According to Noto, here is how Galileo performed in the last quarter.
On an organic basis, Galileo revenue grew 39% year over year, and Galileo enabled accounts grew 48% year over year. And this is with a 26% margin, or 33% if you exclude Technisys. Among Galileo's evolving products, Galileo has added new B2B capabilities as well as a secured credit card offering. I'd like to focus on the B2B segment for a moment, as it is enormous and we're already making great strides. 30% of the Galileo client pipeline is now comprised of B2B deals, up dramatically from 10 to 15% at this time last year, as we quickly leverage these new capabilities to penetrate more opportunities. And considering the market opportunity in this segment, we estimate the B2B opportunity at $29 trillion, with 50% of payments still via paper check. Just like in consumer banking, we have the capability and the opportunity to convert these to digital payments and virtual cards. This is a prime example of how we have driven technological innovation at Galileo to address more market segments and further diversify sources of growth.
Did you hear that? SoFi could tap into a $29 trillion market of B2B opportunities with Galileo. And apart from that, SoFi also has Technisys. Let's hear it from the GOAT himself.
And Technisys continues to achieve milestones with its first core banking deal in Mexico and the launch of a new banking client in Brazil in the second quarter. In addition to new products and an increasingly diverse client list, Technisys and Galileo have yet another major source of growth, cross-selling among their complementary client bases, product sets, and geographic footprints. Bring Technisys to the US through Galileo and Galileo to LATAM through Technisys. Suffice to say, the teams are running after these opportunities, and we cannot be more excited.
Basically, Sofi is not just a one-stop shop for your finances, but also a top-tier tech tool for other firms. We're sure you also know that Sofi's top institutional buyer, Softbank, sold not just 12, not just 22, but a solid 49.9 million shares of Sofi in August. Softbank still has 45.4 million shares, or 4.9% equity stake in Sofi. It must have been a great time for short sellers, as Sofi stock did take a dive after this, and however, it is just one part of the story. What they don't know is that Softbank reported about a $23 billion quarterly net loss on its Vision Fund investment portfolio, its biggest market sell-off according to CNN. Based on Nasdaq's data on Sofi, here are the other institutions that sold some of their stakes in Sofi as of June 30th. Looks like short sellers may be getting new Range Rovers for Christmas, unfortunately, because Sofi did stumble a bit with all the news in the market today. But according to latest data on Sofi short interest, the total number of shares shorted has decreased by 8.8%. Although Softbank is selling, short sellers are celebrating, Sofi in our opinion is obviously still a buy, especially at their current prices, and the current percentage owned by institutions can prove that. According to Nasdaq, institutional ownership represents 43.33% of Sofi. Although 203 positions have sold Sofi shares, 276 institutions still managed to increase their positions in Sofi. In our position, numbers don't lie, and when tons of institutions buy Sofi, it simply means they believe in the long-term potential. Let's hear a piece from Commander Noto.
Yeah, I really can't comment on Softbank's decision to drive liquidity. Obviously, they reported results yesterday, and those results speak for themselves, as do SoFi's results. We had a record quarter again. We've been able to deliver record revenue for the last 4 quarters in a row, growing 50% year over year, really strong positive EBITDA, doubling sequentially. Our first GAAP profitable quarter for the bank, SoFi Bank, that we opened up in our first full quarter there, and really strong growth in members and products, both accelerating. And then what often gets overshadowed is our technology business that also accelerated in Galileo. So we had a really strong quarter across the board in terms of our financial performance, our operating metrics. Really validates our strategy to be a one-stop shop and driven diversification of our business. So I'm really proud of what the team's accomplished, and that's really what we can talk to, and those are the facts.
Shouts out to everyone who commented on our previous video, and a special Wealth Gambit shout out to all the Patreons in our community who truly helped to make these videos possible. Also, we will be coming out with a lot more bangers in the up and coming weeks. So shouts out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Shonda, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufron, and the newest member of the Patreon gang, Alan. Really appreciate all the support, and we will be coming out with some of the best content that we've ever created in the up and coming months. Thank you for watching. We greatly appreciate it. And like always, until next time, peace.